What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
I'm joined today with Ellie Baxter. How you doing today, Ellie?
I'm great. Thanks for having me, Dan.
Oh, it's my pleasure, and I got great news for you. My very favorite audience member is joining us today. And why is my favorite audience member here today? Is because this is a chance encounter where I interview commercial real estate syndicators. That means buyers, sellers, investors, all that kind of stuff. And why would I do such a silly thing? Well, if you know how private off-market, also known as 506B deals work, you know that you need to have a documented prior substantive relationship, or else the SEC will get their sand in there. No, something. I'm not sure what the term is, but it's not good, and you need to have that all buttoned up. So I have people on and find out exactly how they fit into these deals. You get the benefit of understanding how these deals work and also how my guest fits into them. But before we get too excited about that, Ellie, do you want to say a thing or two about yourself before we get onto your business?
Of course, sure. So I'm Ellie Baxter. I've been a syndicator for about a year now. I'm investor relations. So basically, I create relationships, teach people how to create passive income through multifamily commercial real estate. And it has been an amazing journey. And my favorite food is sushi and tacos.
All right. At the same time or separately?
I mean, it doesn't matter. However you want to do it, if it's sushi and tacos, I'm down.
All right, cool. So you're not picky about it, so that's cool. Right on. So the first segment that I always go through here is the five distinct motivations. Before that, I gotta say, but wait, check your eight, Ellie. I don't know if you can see through the camera on your phone and then down there, but the audience might have this ugly red subscribe button that they should probably do something about. Okay, it's a stupid joke, but I do it in every episode.
It was cute. I like it, but definitely subscribe.
There
Definitely.
you go. That's the spirit. And here's the deal. So, with these distinct motivations, I interview all these different syndicators, investors, and whatnot. And even though we all have our own unique why, the fact is, I found that they really fairly neatly fit into these five different categories. And the reason why I need to know it is because these deals take months to take down. There are all sorts of problems that can pop up, different risks, things like that. So I need to understand what is it that's driving my guest to stick with it. Now, the first motivation that some people have, it's definitely not everybody, it's preservation of purchasing power. And what's that all about? Well, some people have a portfolio of assets, and the way that they make ends meet is from the proceeds of ownership. In other words, those profits from owning these different assets are how they pay their bills. And so, why would somebody like that make another commercial acquisition? Well, if inflation is eating away at the purchasing power of that cash flow, that's one circumstance. But outside of that, they're probably only going to be buying if there's a steep discount, and maybe it's because of an asset crash, but it's probably from some other form of distress. That's some people. That's not really me. What I'm up to is I'm trading time directly for wealth. And I have a background in tech. Specifically, it was in the CRM industry. I worked for a major publicly traded CRM company. And then I opened up my own CRM agency in 2011. And once it came to be like 2014, I switched over to doing CRM funnel work solely for real estate. And as my boss was flipping 10 houses a month, I was going like, well, why am I paying more tax than anybody? So how do I pivot to where I'm getting rewarded for my effort in the form of deployed capital, aka equity, instead of paying all this money in tax as a high wage earner, high salary earner? So that's what I'm up to. But many people, especially youngsters, they get involved in commercial real estate because they see these great big numbers floating around. They figure, hey, if I get a sliver of that, oh, I should be set for life. And what they're really up to, though, is they're trying to take control of their schedule. Maybe that means fast track retirement, but maybe it just means they want to work fewer months per year or fewer weeks per month or something like that. They just want that more of that control, and that's why they're doing it. There's a certain dialing down in mind, and that's not everybody in this business. For example, the more ambitious types, the ones who want to buy their entire hometown, the people who want to have that generational wealth, they want to make sure that their great-grandchildren never have to hold a day job. They're making acquisitions. And that ambition is really fantastic as part of your team, because they're going to be sticking with it and hustling into their 90s, whereas people who are looking to scale back will probably give up sooner. But another group that is still separate from those other four, they've found a sector of society, or maybe it's animals, maybe it's the environment, who knows, but they've realized that to make a really big impact, the type that they actually want to achieve, they're going to need a big financial backing, and that's why they're making these commercial acquisitions. So Ellie, of those 5 different motivations, what combination of those stood out to you, and would you say describes you best?
Yeah, I mean, I feel like all of them, I definitely think that the, acquisitions and raising capital kind of integrate together, right? Because without either one of them, you're not going to be able to get a deal, right? You can have, all a million deals, but if you don't have the capital, then you can't do it, right? And vice versa.
Mhm.
And so, yeah, I think a little bit plays a part on all of them, like I always try to add value to as many people as possible, allowing that value to come back as a full 360.
I love it. I love it. But of course, there are plenty of risks involved in commercial real estate. You're dealing with nature, you're dealing with humanity, you're dealing with governments. So, what's important to me, though, is I found that if you've ever been involved in a private deal, a 506B deal, the securities attorney for whoever's running, whoever the issuer is, they should force everybody who's involved to fill out this questionnaire with some pretty invasive financial questions on it. It's not a comfortable thing sharing all that information, but me as a person who's created tests and wizards and all that kind of stuff a gazillion times for a bunch of years, it hit me that the tolerance for risk question, I don't think it gave me a satisfactory answer. Like, I think if you chose any of the answers on there, I wouldn't really be able to believe it. So in this show, I make my own, and it's a fill in the blank question. So there are many popular investment asset classes, but I think blank is too risky. So Ellie, it could be inside real estate, it can be outside real estate. What is too risky for you to invest in?
Pokemon cards.
Pokemon cards, yeah, yeah. You're not a fan of only relying on appreciation. That's the first one that comes to mind, or you got another one?
Yeah, I think that one's great. What
Yeah.
else? Magic cards.
Magic cards, excellent, excellent. Yeah, I noticed that even with all this inflation, there hasn't been a whole lot of upside on Magic cards if you're an actual fan. But that's some good stuff. So yeah, this is my segue into the next segment. That's so intense. It blows my
That
mind.
was insane. You just ate
Right.
an entire sandwich.
Oh yeah. Oh yeah. He wanted to sub real bad, but the best reason why I think people should subscribe to these Chance Encounters is because of the Dan Does Deals Commercial Core Competency Cube. You can get your own copy of this cube at dandoesdeals.com. It's absolutely free, and like a complete dummy, I don't even ask for your email address, which from a marketing perspective, that's the worst thing you can possibly do, is not ask for any contact information in return for your freebie. But I want to make sure that there's nothing stopping you from going to the site, printing this out, and then practicing describing these different sides in a deal so that you can effectively communicate with friends, family, basically build your commercial real estate business. Because if you can't explain all this stuff, you're not going to get very far. But I go through all 6 sides in every episode, and it only takes 2 minutes, and that way you'll know how my guest fits into these deals as well. So let's get started. Repositioners are acquisitions people, so they're looking at a bunch of deals, they're doing a bunch of paperwork, and I'm sure you're just dying to know, what is this paperwork that they're doing? Well, there's a fancy word for it. It's called underwriting. They're underwriting the deal, so they're figuring out, first of all, is this property even making the amount of money that the owner, the seller, the broker is claiming it is, because it may not be. And they're thinking, how can they change the business so that they can find more upside? And one thing that I know Ellie already mentioned is one of her fortes. She works with a lot of financiers and investor relations. And financiers, just to be clear, those are people who only deal with paper and money. So they can't, the financiers themselves, they can't be part of the GP team. You have to have some sort of real deal in asset management in order to be one of these other sides. But the reason why every repositioner has to have some financier relations, have a big network of financiers, is because if they can secure a more advantageous loan, that goes straight to the profitability of the business. In other words, it's making more because the loan costs less. So that's why they're getting to know all these financiers. But a more typical, understandable way to find upside in a commercial property is look at the operations and stop those Benjamins from going down those toilets. Because there's, sure, this is a very competitive industry. It's been around for a long time, so there's only so much you can pull off. And but there is more than just collecting rents and mowing lawns and all that kind of fun stuff. And one of the ones that I contribute to my GP team is the whole team is confident that even if we currently use a third party for our buildings because we like to have bigger deals. And if we ever run into the situation where our third-party operations, they can't fill the units, then you're going to need somebody with some real marketing chops in the fold to say how exactly are we going to get those units filled, because that's the biggest cost, the biggest expense is empty units. But of course, there's more to all of this business than just optimizing operations. Usually they're not going to find quite enough upside that way. So the repositioner is going to get a contractor team involved to do a value add, do renovations on the units, and that way the next residents will be more than happy to pay more in rent than the previous one within hard limits. Because, you can go ahead and try gold plating some toilets, but you're not going to get a decent return on investment if you're pulling stuff like that. But if you are like me, see, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground. I need somebody who can be there in an hour or two, because I categorically will not be there in an hour or two. If I had to, I'd still be stuck in an airport in an hour or two. So I definitely need those locals, those boots on the ground, to keep an eye on the contractors, make sure that they're not using substandard materials, make sure that they're getting things done on time. Also making sure that the operations team, they're not cutting corners either. But when the repositioner has figured out a property that they want to acquire, they've assembled this team, they'll turn around to the financiers, the banks, the lenders, and say, hey, this property is like 350 units and it's tens of millions of dollars. Do you happen to have, say, tens of millions of dollars you want to lend us for this? And of course, there's one big question that's going to be on the financier's mind that I haven't alluded to yet. And I find a lot of coaches and guru programs, they really gloss over this part, which is the sponsor KP. They're going to be saying, okay, who's the KP or who's the sponsor? And what's that all about? Let's do a hypothetical. You are an engineer or a physician or something like that, and you have a group of friends, you want to pool your resources and take over a commercial real estate building. Well, the snag in your little plan is going to be that the bank is going to require that somebody in the fold already owns a similar asset. So they're not going to lend you money to take over a 350 unit apartment complex unless somebody in the fold already owns a 350 unit apartment complex. That way they know that you won't run it into the ground. But on top of that, you need a certain amount of liquidity, and then among the owners, you need a balance sheet of at least the amount of the loan. But if you have all of those pieces, you got yourself a commercial real estate deal. So Ellie, we've already given some details about how you fit in the big scheme of things, but I don't want to put words in your mouth. You're really financier relations with some operations, aka asset management roles. That's what I understand. Am I on the mark there, or do you want to?
No, yeah, that's perfect. That's perfect. I raise the capital, and once I get on the deal and become a GP, that's when I get into the asset management, because I like to know what's going on with a property, and that way I can also inform my investors, how their money is really working for them.
I love it. I love it. And that brings us to the buy box. And when commercial real estate people are talking to each other and they're saying, hey, what you looking for? What's your ideal property? What's your buy box? We're really asking about three main things. The first one is geography. Where is it? Okay, we need to know which state, which county, possibly even which neighborhood before we would call it ideal. So that location definitely matters. The second one's size. Most of my guests on this show, well, everybody's in commercial real estate, but they're generally in multifamily, which means apartment complexes. And the way that you rate size in an apartment complex is by unit count. And it's super important because there are teams that take over 5 and 15 unit apartment complexes, but if they're the teams that take over 150 or 350 unit apartment complexes, they're going to look completely different. So that size definitely matters. There are other forms of commercial real estate that go off of square footage, like warehousing and things like that, but that size is something we're going to need to know before we call it ideal. But the third one is called class. And one of my pet peeves is when people use one word to mean two different things. So I separate that into two different terms. The first one's condition, second one's area. So when it comes to condition, that means how old is it? How beat up is it? How up to date is it? And then of course, what kind of luxuries or amenities does it have? Like, does it not have any? Like there's no gym or there's no laundry facilities, anything like that? Or is it full of all sorts of really wild stuff? So that's the condition. But when it comes to area, they're talking about things like what's the crime rate like where this property is located? What about the school districts? How are they around this property? And then, of course, both of these are really talking about desirability. And so that means also how many cars are going by, how much traffic is going by where that property is located in a given day. But both that area and the condition, the two different usages of the word class, they're ranked the same way as in grade school, where A plus is at the top and then A is below that, then A minus and B plus and so on. But Ellie, as far as you're concerned, I understand when you're raising, there's a little bit of limitation as far as what you can pick and choose, but what tends to be ideal for you, or are you really more dependent on the sponsor?
Yeah, I think it's a little bit of both. I think that I definitely like to do my market research when a deal is brought to me and asked to raise. So if someone comes up to me and says, hey, can you raise, capital for this property? They already have their LOI submitted, everything is ready to go, but I still need to make sure that it's, attractive to me and my investors. So I will like to go through the marketing, CoStar reports. I go through all of that. I underwrite it myself. I do make sure that is something that when I do bring to my investors, it's a very clear yes. So it's really like just like what you're saying, really honing into those three, demographics and population, and what's going on in the future, the next 5 years, when we do sell it, to make it even more attractive for the next buyer.
Great, great. And so, as a capital raiser, I'm sure that a lot of your focus is on meeting more and more of those financiers to get those deals over the finish line. You're also going to be needing the different repositioners, the deal finders themselves, to supply more for your investors. But as far as who's out there, I should take an aside and mention we all have our own unique skill sets, but at the same time, even though we're all so eager from the multifaceted nature of commercial real estate, we're so eager to help give referrals, build new teams, help people out. But since we have our unique skill sets, we're still better suited to help some people more than others. Me personally, because of my tech background, the marketing, the content, all that kind of fun stuff with CRMs and automations, it's usually the sponsors and KPs that I'm eager to talk to. These days, the locals are a bigger and bigger piece of who I need to seek out, because after all, I'm from the internet. But Ellie, I imagine it's the financiers are the big ones. But who on this die are you really eager to talk to?
Oh, definitely the sponsors too. Definitely the sponsors, KP. I think that's huge. It's really important that you create a relationship with them and vice versa, because if a lot of times people say that the sponsors, interviewing that person to be on their team, but it's also the same way. We're also interviewing them to make sure that we do work well together. But I really love generating, amazing relationships with sponsors, because that's a lifetime relationship that you can have with them, where you can continue to work with them on multiple deals, and then just both of you guys make lots of money. And I'm all
Mhm.
about that.
I love it. I love it. And then as far as how to reach out, me, I'm easy to find because I got this distinct last name, especially on LinkedIn. That's where I spend most of my time. But if you have your phone handy and you scan this QR code, that goes to the FAQs page of 506BME, which is the platform I offer to document your substantive relations among your investors. And the idea being, you may not be aware of this, but once you get to a certain number in assets under management, the SEC will audit you in how you're doing these deals, especially to make sure that if you're doing 506B deals, that there's no public solicitation going on. So you need to have that documentation before it's okay to bug people, say, hey, I got a deal. So you don't want to be doing that. They'll get ants in their pants. But Ellie, as far as you go, is there a website, a social media platform? What's the best way to reach out?
Yeah, I would say probably email or phone. I do texting or calling. And I can drop that information down as well. And I also, of course, LinkedIn, Ellie Baxter, Instagram, Ellie Baxter. I'm all the way across. There's actually, unfortunately, a lot of Ellie Baxters, but only one face like this, so you'll be able to see me.
Yeah. That's you definitely got that going for you as far as like a distinct look about you. So that's pretty lucky. No, I just mentioned from a marketing perspective, I'm always looking for what
Yeah,
it's that mental real estate, anything that sticks in
yeah,
people's heads, and that's why when I was a kid, I didn't like my last name at all because it's long, it takes ages to write. But now that I'm on the internet, I'm like, thank you.
yeah. There's only one Brandenburg. Yep, I love that.
Yeah, that's really it. So that's really awesome. So like other guests have put out their email or phone, whatever they're comfortable with. If you want to mention it, or I can just put it in the notes in the description. What do you prefer? Do you want to say it now, or do you want to give it to me later?
Yeah, sure. I can do both, but yeah. So my email is Ellie at bandfcapital.com. So B as in boy, F as in Frank. And then my phone number is 984-789-7586.
All right, great. And the and is spelled out AND. It's not just an N like.
Correct.
Okay, cool.
Correct.
Awesome. So then the last thing then, it's actually not for you, Ellie, it's for you in the audience. It's a public service announcement. If you've been watching this episode and you've been experiencing searing pains in your eyeballs and like migraine-like symptoms, I'm really confident it's that hideous subscribe button that's just right there. And you can get rid of that for free, You just click on it and it's gone. It costs you nothing. Sure, I'm biased. I want people to click on it because if enough people click on that button, then YouTube will start to pay for these videos instead of me. And I think that would be amazing. And all it means to you is my videos might show up on your list of suggestions. You can feel free to ignore those suggestions because I just appreciate the fact that you spent this time with me. Just like you, Ellie. I appreciate you joining me today. It's been great getting to know you a little bit better.
Yes, thank you for having me. It's been awesome to learn more about you and what you do, and it's awesome. Thank you.
Awesome. Thanks.
Make sure you 506B me. Any syndicators, make sure you 506B me. Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser. Okay. Are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506B me, everybody.